Hey, so the inflation numbers came out this morning, and it's looking like the Fed's target of that 2% inflation mark is going to be harder and harder to hit. So, does that mean we're going to have higher rates for longer, or are we going to start looking at some other things to make the Fed's ultimate decision when to cut rates? Hey, so welcome to this week's Mortgage Minutes with Mitch. I'm Mitch Jenkins, Senior Loan Officer with Your Home Financial. So, had a short week this week. The market closed at 2 o'clock on Thursday, and that's to observe Good Friday and the Easter holiday weekend. So, the report that came out this morning was the Personal Consumption Expenditure Report, the Fed's favorite measure of inflation. And what it did is it actually came in about a tenth cooler than expected, which is good, but they revised January up about a tenth hotter than what it was actually reported. So, kind of canceled itself out. Really not great news, but not terrible news. So at the end of the day, we're not sure exactly how the market's going to respond because it's closed. So Monday could be a volatile day. We'll have to take a look. But what is becoming more and more apparent is that the Fed is going to start focusing on some other things in addition to just inflation. So we know the two Fed mandates. One is to control inflation, the other is to maximize employment. And you have kind of one camp or group of thinking within the Federal Reserve is that, hey, rates are not, or inflation's not coming down quite as much as we want. We need meaningful progress, no hurry. But then you have another camp that's starting to emerge where they're starting to focus on unemployment. And as I mentioned in a prior video, that number's starting to creep up. Even with these gangbuster Bureau of Labor Statistic reports we've been seeing where, unbelievable numbers of jobs have been added to the economy, the unemployment rate has risen. So that's another mandate that the Fed really needs to watch closely, and that could come into play here in the next couple of months. Now, one other thing to point out, the leading economic indicators, and I mentioned this a few weeks back, they have been negative for an incredible amount of time, and that is a guaranteed sign, if you look at the past, of a recession. Now, what's interesting is after 23 months of negative leading economic indicators, last month we finally went positive. So for the first time, basically in 2 years, that was a positive number, which could be a sign of good things to come, or just another sign that things are not quite what they seem. So hard to tell. All I can do is give you my best, keep you updated on what's going on. So if you are thinking of buying a house, I still think it's a great time to get in before the market goes crazy. When rates do drop, you can always refinance. But if you do wait, the competition is going to be fierce. So let me know how I can help. Would love the opportunity to work with you. In the meantime, have a very happy Easter. Thanks for watching, and we'll see you next week.